Now on Bloomberg Intelligence, Munis in Focus.
All right. Today's Munis in Focus is brought to you by Build America Mutual. BAM Mutual insures municipal bonds that finance essential infrastructure and provides guaranteed income to improve any portfolio. Learn more about municipal bond credit quality. Visit bambonds.com. Let's check in with Eric Kazatsky, Senior Municipal Strategist for Bloomberg Intelligence. He's based down there in Princeton, New Jersey. Bonds are doing a little bit better here in the month of November. Eric, talk to us about the muni bond space. Did they participate?
Yeah, absolutely. Look, they're wildly outperforming treasuries, which is really what we want to see, right? For those who are sort of value shoppers. But I think the story is, volatility in our space has really sort of led to these better returns. And we're sort of tracking along with previous Novembers where we've had really strong total returns coming into investors. And I think it's a feel-good story right now.
Where in anything in particular where you're seeing the better performance, Eric, or is it kind of across the board for the munis?
No, it's definitely in those credit and spread sectors, definitely like lower down the credit stack, talking like high yield munis, things that have really sort of been outperforming all year. They've continued to sort of truck along. But, when we look at different coupon stacks, it's definitely people are showing a preference for, paying up for a 5% coupon, sort of being a little bit more defensive as far as their future purchases and trying to offset any sort of rise in rates that might come along in the future.
Eric, where do you see flows going? Like, is money coming out of things like money market funds and going into munis as sort of treasury yields? Well, at one point they were going lower, and now they're over 4%.
Mm-hmm. Yeah, I mean, look, we're seeing continual flows into munis. We can't exactly trace where they're coming from. Not a lot looks like it's coming out of muni money market funds. They still seem to be collecting assets. But it really is just a lot of cash that's coming back to investors on a monthly basis is immediately being redeployed into the space. Especially like new money coming in that's separate and aside from that is, readily flowing into the exchange traded fund space and also the SMA space. So, definitely they're outperformers when it comes to, getting new assets and growing those over time.
How about what's been the election effect for the municipal bond market? Eric, what have you seen?
Yeah. I am pretty sanguine if you sort of think about the potential for disruption coming into 2025, right? So we have President-elect Trump, or President Trump, however you want to phrase it, coming back into office. And he really is focused on extending with some permanence some of those provisions in the Tax Cuts and Jobs Act. What really is the big question mark for the muni space is, can any of the portions of the tax exemption or the exemption at whole really be under threat? And we are hearing increased chatter when it comes to sort of more concerns when it comes to that. They can't outright cancel the tax exemption, but they certainly could sort of, put a cap on what that exemption is worth and sort of go about it that way, which would obviously like impact the value of muni bonds. How that would play out is really sort of fan fiction or conjecture on our part at this point. But, we are trying to sort of put a note together to sort of think about what the world would look like in a post-exemption space.
Can you tease the note a little bit? What might that look like?
Well, look, I mean, and I know people in my space really hate when I say this, but if munis all of a sudden found themselves, taxable, I don't think it would be the worst thing in the world because you'd have a ton of new buyers coming into the space, right? We have a very different risk profile than, let's say, corporate credits, and you'd have a bunch of issuers who would really sort of bulk up in size, right? You'd lose a portion of the market that are really these small muni deals that come to the market, these small towns, small school districts, small charter schools. They would really not be accessing the muni market. So you'd have larger sort of index eligible corporate size deals, and that would attract money from overseas and pension funds here, and banks and corporations have really been sitting on the sideline when it comes to munis right now because of the tax disadvantage.
Eric, thank you so much. Appreciate it as always. Eric Kazatsky, Senior Municipal Strategist for Bloomberg Intelligence, based down in our Princeton office.